Welcome to the Microfinance podcast. Listen to inspiring interviews and take a look at tools and products that are used in the field. This podcast is produced by MicroSave Market-led solutions for financial services and is brought to you by Moving Planet Films.
You could probably get a scoring system in 3 to 6 months if you had all your data ready and you're ready to do it and everyone in your organization is motivated and you've got programmers lined up who are going to dedicate full time to it. After you have the system installed and tested, then you might want to do a 6 to 12 month pilot, depending on how long your average loans are. You probably want to have a pilot at least as long as, if you're making 12-month loans, have a 12-month pilot. All during this basically 3 to 15 months that I'm talking about here, you would be having inputs from the scoring provider. Scoring is different than a lot of consultancies, at least I did in the past, where you read a bunch of articles or reports, you fly in, interview a bunch of people, gather their annual reports, you fly out, you write a report, and that's it, it's over. Here you're actually changing how the organization works. So there's follow-up, you put the scorecard in, they don't like parts of it, so you change it, they don't like the reports, they want different reports, so there's a lot of adjustments and changing things as time goes on. It's not just a once-off, it's done, goodbye thing. So, after the pilot's over, you're going to change a bunch of stuff, there's going to be training. So it's, you could get it installed in 3 to 6 months, but before you have it rolled out to the entire lender might be 1.5 years or 2 years. And in terms of dollar cost, probably $50,000 to $100,000. A lot of it depends on if the database is in good shape. It's a lot simpler. The future of scoring, I think, is going to depend mostly on credit bureaus. So in bigger countries that are less poor, Colombia, Argentina, Mexico, Brazil, perhaps North Africa, maybe South Africa. Well, South Africa, it's already there. Those countries are going to have micro-lenders pick up scoring in a really big way. And I think the result will be fairly quickly, micro-lending will become credit cards, basically. In other countries, it may be that you've got banks that are downscaling. They'll definitely use expert scorecards because they're very scared of their lack of knowledge about how to make these type of loans. They'll be using expert scorecards plus microfinance traditional technology. And over time, all lenders are slowly going to build up the database and start using these things. The pattern so far has been that 1 or 2 lenders in a country gets famous for using scoring, even if they're not really using it, they just have the project. And then their competitors say, oh my God, I've got to get scoring too. So they start doing a project. So I think once in any given country, a big lender, which is the ones that could do it and should do it and would benefit from it, start doing it, you'll see their competitors trying to do it, and they will probably do it on a smaller scale. I think you'll see different kinds of scoring as well. You'll see not only what I call pre-disbursement scoring, which is the sort of scoring we've been talking about. Should we make a loan to this borrower or not? You'll see dropout scoring, which is saying, okay, of the borrowers who are slated to make their last payment this month, who are those who we think are good credit risks, but we think they're likely not going to come back? So they're people we want to keep, but we're not going to be able to keep them. So if we know who those people are, we go and visit them and give them lower interest rate, a special card, whatever you do to motivate a borrower to come back. Maybe it's just the visit. And the other thing that's really big, that's going to come before any of this in microfinance, is poverty scoring, which is not measuring risk at all, but measuring the likelihood that someone is below or above a poverty line. And that's a really easy scorecard with 10 indicators, such as, do you cook with wood or something else? Do you have electricity? Do you not? How many kids are in your family? Do they all go to school? Do you own land? Do anyone in your family have salaried employment? So all the concepts of that are the same as credit risk scoring, but you're basically measuring the probability that they're poor or not. And so lenders who are not 100% focused on profitability and who have donor money or who are trying to reach some double bottom line can use this type of scoring very, very easily because it's so easy and intuitive to predict who's poor or not. And that may be their sort of first step into scoring. And from there, sort of get a taste for, wow, you know, I can really manage depth of outreach now because I know this branch, only 15% of borrowers are poor, and this one is 40% of borrowers are poor, and they're right next to each other, and there's no reason for that. So let's ask this branch why they don't do better. Once you start doing that, then you can say, well, gosh, I wish I could do that with credit risk too. Gosh, I wish I could do it to figure out who I should encourage to return for a return loan, et cetera. So the long-term effect of scoring is going to be, in my opinion, to sort of promote a culture of explicit, intentional, quantitative risk management. That's not as much there now. In other words, the sort of number crunchers or quant guys in the central office, and I'm not talking about statisticians, but the managers who can analyze numbers and figure out what to do with it, they're going to become a lot more important. And their decisions are going to become a lot more accurate and valuable. And once people start making decisions with scoring, they're going to say, gosh, I wish I had it for this and that. So downscalers will start using expert scorecards. I think the sort of everyone who's interested in a double bottom line will start using the poverty scorecards. Many of them will very quickly, I think. And larger lenders who are competing with other lenders, one of whom has started to use scoring, they're going to say, oh my gosh, I've got to use scoring, and they'll start as well. It's going to be a long time before scoring gets to where it's at in rich countries. But I think in 10 years, instead of scoring being maybe 20% of the decision, it might be 50%. And loan officers will be much more just lower skilled, less paid information gatherers or information verifiers as opposed to the magic walking branches they are now.